Hey investors, I know you're having a hard time qualifying for loans, especially in this market that we're going through with the overlays due to COVID and the financing. It's just getting a little bit more strict getting qualified for a loan. So in this video, I'm going to touch on how I was able to assist one of my investors pick up her sixth door as a self-employed earner and share with you that qualifying for a non-QM, non-qualifying mortgage loan is not much different than the rates on a conventional loan. Let's go over the situation of this investor. Female owner, runs and operates a dental office and is looking to pick up more investment properties. Her income that she filed on her tax returns were not efficient to qualify for this sixth door. Because remember, you're needing to have enough money to be able to show that you can cover your primary, your investments, have reserves to be able to meet the guidelines through the Fannie and Freddie Mae agencies on a traditional loan, right? Whereas on a non-qualifying mortgage, I did not need to collect any type of income documentation, so no tax returns, no profit and loss, no balance sheets as a business owner. Instead, what I did was prepare numbers for her on what it would look like to purchase this home, how much money does she need as down payment to basically be able to show that her rent will be in fact higher than her mortgage payment. In this situation that I'm going to share with you is really the comparison on what interest rates look like right now to buy a house at say $375,000 as an investment using a conventional loan and then also a DSCR loan. Seeing the difference in payments, I want you to really make note that, remember, to qualify for a conventional loan, there's more scrutiny involved. There's more guidelines to follow. That's one of the cons of qualifying for a conventional loan. Some of the pros may be that you have a lower rate, but I'm not seeing that happening at this time in our market, and here's why. In this total cost analysis, I'm going to break down now the two types of financing as we discussed. Conventional on the left-hand side, purchasing a home at $375,000, putting down roughly 20% to start will make your payments, as you notice here, $1,900. That includes your taxes and insurance at an interest rate of 5.625. Now remember, in order to qualify for a conventional loan, what are the stipulations involved? You have to make sure your debt to income ratio is below 45%. You're going to need to have a certain amount of reserves in your bank. You need to have enough income to support all of the debt that you carry. In this case, she's purchasing her sixth door. So that's making sure all of her principal and interest payments are covered. Her taxes and insurance are sufficient, in addition to acquiring this new property that she can in fact qualify for that mortgage. In this case, she didn't because her income taxes were too low. So really the left-hand column is not an option, but ultimately what I wanted to show you was the difference in rates. If you notice on the right-hand side, this is the breakdown on what it would look like to qualify using a DSCR, short for debt service coverage ratio loan. Your interest rate is at 6.99, making your payments $2,150. In this case, the investor doesn't see that big of a difference of a $250 payment because one, they're not able to qualify for this loan that you see here on the left-hand side as a conventional. She was able to qualify via DSCR. So the rates, in my opinion, is not much difference with if you're looking to qualify for a loan that doesn't ask for all these income documents, right? Especially if you're going to a bank and they're telling you they don't offer this option, which most times non-qualified mortgage offerings aren't available at your local credit union, your bank, even your traditional lender, because a lot of people don't know about these products. So I was very grateful to know that I was able to help this individual qualify for another purchase. We've closed and funded on it, and she's already ready to pick up her next property. If you find yourself in this similar situation where you're not able to qualify for a loan and have been told that they can't help you, connect with me. My information is below in the description. Be sure to send me a DM or call, message me so I can run the scenario over with you, just like I shared with you here, and see if it's a better fit or what program is best suited for you. So thank you so much for tuning in today. I will see you guys on the next one.